Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Thursday, December 13th, and we do got a bit of economic news releases here. And starting with the weekly jobless claims. So these are going to be here on out, going to be a little bit more important because yesterday, as we mentioned, the Fed had their first meetings yesterday, and for the first time, they actually tied it to an index, which is basically would be jobs. And for the continuation of the QE3 or the purchase of the mortgage-backed securities, that they're going to keep buying those at $40 billion increments each month up until either 6.5% unemployment rate or perhaps 2.5% inflationary numbers. Now, inflationary in this case is important because typically their threshold for inflation is 2%, and they kind of increased it to give a little bit more threshold of 2.5%. So you'll be so we can have a lot of volatility when we have our job rate numbers claims. So just keep those in mind. We had 372,000 that applied for unemployment last week. We were figuring it would be around 370, and this week came at 343. Now, some of these you got to always be, again, you got to be a little cautious. If you've heard me each week talking about the jobs, you got to be a little cautious as you got the retailers for the temporary jobs for construction. You got also for the retailers hiring people for the holiday sales and such. So sometimes people come off, and then it also had a big drop off of people just stopped looking for work. So, if you're not after about a month going back and reapplying, you basically fall out that number. So that's why most people feel that the unemployment number dropped as much as it did the last reporting. Okay, so now we got the retail sales for the month of November, which will be key, obviously, because we have Black Friday there. We had a negative 0.3 in for October. We figured it would jump up to 0.4, and it came only up to 0.3. So it's kind of disappointing as again, last year we had the same thing where they kind of built it up that with the Black Fridays and everything would bring up a lot of sales, and it didn't generate as much as they had anticipated. Now, if you strip out the autos because they're big ticket items and it can kind of obscure the numbers, we had a 0 for October. We figured it would be estimates were negative 0.2, and it was basically 0. So again, once you take out autos, really it wasn't a whole lot of sales in or any sales in the month of November. Now we got the producer price index. This is the inflation number on the wholesale level. Now this is kind of a gauge as to possibly we'll kind of watch the CPI and the PCE if it maybe gets moved on, but not all the time when the wholesale level, when their inflation and their costs go up, is it always pass on to the consumer. So that's why we put more importance on the consumer versus the wholesale level here. We had back in October, it was a negative 0.2, so it was showing some current traction. I figured it would be, pull back even more, and it did. It pulled back about 0.8%. So a pretty big pullback on there. But once you pull back food and energy, we had, again, a negative 0.2 for the month of October, and we figured it'd go up a little bit, and the forecast was go up 0.2%, and it only went up 0.1%. So inflation is very tame here right now, as we can see even on the wholesale level at 0.1%. And then we got business inventories. This is how businesses holding inventories sometimes can be a good thing for the economy, meaning that they're stocking up and figuring they're forecasting better sales. Or on the negative side, it could be they just didn't sell them and sitting in their inventories. So he had back in September, we had a 0.7% increase. We figured the estimates would be about 0.4, and it came in, we're forecast at 0.4%. So let's jump over to the headline news here. And right now the stock market's down. After the news yesterday with the Fed statement stuff, there was kind of a big run up on the stock market, and today they're kind of doing, it's more of a technical. So a lot of it's people are buying into it, or selling for cashing in on the profit, so to speak. And then we have Euro ministers over approving a long-delayed aid for Greece. So Greece was meeting the steps on there, and they're basically kind of extending their debt over a longer period to help them make their payments a lot easier for them. So this is something that was good news. And then also the Fed and global central bankers extend that dollar swaps lines. This is something that was created last year when there's the big crisis in Europe was getting to be a lot larger. It was due to expire in February of 2013, so they extended to February of 2014, and that they'll continue this line to keep the liquidity in the banks. Again, this was mostly for Europe as they were having their debt crisis going on there. So let's go ahead and jump over to the bond market. And as you can see, yesterday, they're a little disappointed that the Fed, in their statements, basically said, Operation Twist was in the process of going away, and basically they're extending that to the long-term treasuries and the mortgage-backed securities. We're kind of hoping that they would, when they renew, they would hopefully maybe increase the mortgage-backed securities, and they had a big sell-off yesterday, which resulted in higher interest rates. And it kind of continued a little bit today. We had a little bit more with the tail here. You can see it was down further, and now we're kind of pulling upwards. So it looks like this will be a pretty strong resistance right here. So I look to this be a floor. We could have a nice bounce up here shortly. So in the short term, we have increase in the rates, but in the long term, rates will probably get a little bit better. As we hit this floor here and have the correction that we've talked about in the past. So, and as we mentioned before, we even had some opening gaps a while back and never got them closed. So this is an opportunity to be able to close those opening gaps that we hadn't closed before. All right, folks, thanks for stopping by. Rates, unfortunately, are a little bit higher today, but stay tuned. Tomorrow we got the CPI report, so again, inflation news will be important. And you guys have a wonderful day. Thanks for watching. And if you guys like to see these on a daily basis, just stop by mikesdailymarketreport.com, and we'll have these emailed to you on a daily basis. And this information is not shared to anyone else. The only piece of information here from us are these videos. Have a wonderful day.